earnings conference call of RRKABEL Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Darshini Desai from MUFG Intime, their investor relations. Thank you, and over to you, Ms. Darshini.
Thank you. Good afternoon, everyone, and I extend a very warm welcome to all participants on Q2 and H1 FY26 earnings conference call of RRKABEL Limited. Today on this call, we have Mr. Mahendra Kumar Kabra, Managing Director, and Mr. Rajesh Jain, Chief Operating Officer. Before we begin this call, I would like to give a short disclaimer. This call may contain some forward-looking statements which are completely based upon our beliefs, opinions, and expectations as of today. These statements are not guarantees of our future performance and involve unforeseen risks and uncertainties. With this, I hand over the call to Mahendra Kumar Kabra ji. Over to you, sir. Thank you.
Good afternoon, everyone, and a warm welcome to all of you joining us for our Q2 FY26 financial results discussion call. I am pleased to be joined today by our COO, Mr. Rajesh Jain. I hope you had a happy and a safe Diwali. Before I start, it is an honor to announce the leadership transition of Sri Rajesh Jain to Chief Operating Officer following an extraordinary tenure as our Chief Financial Officer, and Sri Jigar Mehta, previously Vice President Finance, as our Chief Financial Officer. I extend my warmest congratulations to them as they step into their new roles. The second quarter has been particularly encouraging for RRKABEL as we delivered robust growth both in revenue and profitability. This strong performance was primarily driven by the resilience and expansion of our core wires and cable business, which remains the backbone of our company's growth strategy. The wires and cable industry continued to perform well, supported by several economical drivers: robust construction activity, infrastructure expansion, renewable energy expansion, government focus on electrification, and healthy demand from both institutional and retail markets. RRKABEL has leveraged these trends to deliver another quarter of consistent growth driven by strong traction across product categories and sustained operational discipline, enabling margin expansion. Our focus on high quality, safety standards, value-added offerings, and compliance with global quality benchmarks has further strengthened our market position, which helped us maintain healthy momentum across regions and end markets. In the FMEG segment, market conditions remained challenging, particularly in fans and appliances, while switches and lighting products have performed better. Despite softer demand and seasonal headwinds, we have maintained steady performance, reflecting operational discipline and the strength of our diversified portfolio. Our continued efforts in product optimization, cost efficiency, and network expansion have yielded visible results. Overall, Q2 FY26 marked a quarter of solid progress for RRKABEL year-on-year as well as sequentially. We are confident that we will be able to continue to deliver sequential growth in all parameters in second half of the year as well. With this, I'd like to hand over the call to Mr. Rajesh Jain to take this call further. Thank you, everyone.
Thanks, Mahendra ji. At the onset, I am grateful to the board and our leadership for their trust and support over the years. In my new role as COO, I will continue to work to sustain RRKABEL's strong growth trajectory and deliver value to all our stakeholders. India's growth story remains strong. The second quarter saw stable GDP momentum supported by government infrastructure spending, healthy private capex, and gradually improving consumer sentiments. While inflation moderated and rural demand is showing early signs of recovery, the broader industrial ecosystem remained cautious due to input cost fluctuation and uneven weather conditions. Nonetheless, the electrical and construction sectors continued to benefit from ongoing infrastructure investments, housing growth, and urban electrification projects, all of which form the foundation of RRKABEL's long-term opportunity. The Indian wire and cable industry is also witnessing a shift towards organized and branded players, driven by highlighted consumer awareness around safety, efficiency, and compliance. RRKABEL, with its deep distribution network and premium product positioning, is well aligned to capture this transition. Furthermore, export demand remains healthy, supported by rising global preference for Indian manufactured cables that adhere to international standards and certifications. In this favorable environment, RRKABEL has delivered another quarter of consistent growth and operational excellence. Our continuous focus on value-added, energy-efficient, and safety-compliant products continues to differentiate RRKABEL in a competitive landscape. Our revenue from operations for the quarter stood at rupees 2,163.8 crores, representing a solid 19.5% year-on-year growth compared to rupees 1,810.1 crores in Q2 FY25. This growth was preliminarily driven by robust performance in the wires and cables business, where we achieved healthy volume expansion and improved realization. This segment saw a 16% volume increase, reflecting both institutional demand and the continued trust of retail consumers. For the first half of FY26, revenue grew at 16.7% year-on-year, marking the highest ever half-yearly revenue in the company's history. On the profitability front, EBITDA rose sharply to rupees 176.1 crores, an increase of 105.8% year-on-year from rupees 85.6 crores in Q2 FY25. The EBITDA margin expanded to 8.1% from 4.7% in the previous year due to operating leverage, reflecting better cost absorption and sustained efficiency initiative across the procurement and production chain. Our ability to manage cost pressures while maintaining quality has been a key differentiator in an otherwise competitive market. For the first half of FY26, EBITDA reached rupees 319.2 crores, up 76.4% year-on-year, with margin expanding to 7.6% compared to 5% in the same period last year. Moving to the bottom line, profit after tax for the quarter stood at rupees 116.3 crores, registering a 134.7% year-on-year increase from rupees 49.5 crores in Q2 FY25. PAT margin expanded by 264 basis points, reached 5.4% compared to 2.7% last year. On a half-yearly basis, we reported our highest ever H1 PAT of rupees 206 crores, up 80.9% year-on-year, with margins improving by 173 basis points to 4.9%. Overall, Q2 FY26 has been a quarter of solid progress, demonstrating the strength of our core business, disciplined execution, and robust demand environment. In terms of segment performance, the wire and cable business remained the primary growth engine. The segment reported revenue of rupees 1,971.2 crores in Q2 FY26, up 22.3% from rupees 1,611.8 crores in Q2 FY25. For the first half, the segment delivered rupees 3,804.7 crores, a growth of 19.3% year-on-year. Segment profit rose sharply to rupees 180.4 crores, more than double from rupees 81.8 crores in the same quarter last year, supported by a 16% volume increase and stronger realization. Our business benefited from consistent institutional demand and a firm retail base, supported by efficient execution and cost optimization. The FMEG segment, on the other hand, experienced a marginal decline in revenue, recording rupees 192.6 crores compared to rupees 198.3 crores in Q2 FY25. While the broader market environment remained challenging for fans and appliances, a festive-led recovery is underway. Our efforts towards product rationalization, operational efficiency, and cost control helped keep losses largely stable. We remain confident that with the ongoing improvements in channel reach and brand strengthening, the segment will continue to its path towards gradual recovery and profitability. Our working capital had remained stable during the period, with debtors days being in line with previous periods. Inventory levels were increased to increase consumer demand and ensure uninterrupted supply amid rising demand. On the demand front, domestic sales continued to drive growth during the quarter, supported by increased spending in housing and construction, as well as steady industrial and infrastructure activity. Export demand also improved, particularly from key markets, reflecting our efforts of diversify geography and expand our global footprint. Looking ahead, we remain optimistic about the outlook for the second half of FY26 and expect the second half to do better than first half. The underlying demand environment continues to be favorable, supported by government infrastructure initiative, the ongoing formalization of the electrical sector, and increasing consumer preference for branded energy-efficient products. RRKABEL remains focused on deepening its distribution reach, expanding export footprints, and introducing technologically advanced products that cater to emerging sectors. Our strategic investment in automation, digital sales enablement, and brand building will continue to strengthen our leadership in the industry. With this, I would request to open the floor for questions and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Manoj Gori from Equirius Capital. Please go ahead.
Thanks for the opportunity and congratulations for good set of numbers. My question is, if I look at the performance over the last 2 to 3 quarters, we have been probably doing well on the margin side. On wires and cables EBIT margins, we last year exited at close to around 7.4%. And currently, we seem to be on the upward trajectory. So, how should we look at the margin performance? H2 should be similar to Q2 levels or H1 levels, and probably the volume growth that we have registered during the quarter 2. That momentum continues even in October, and probably that should be expected in second half. How confident we are on that based on the current visibility? Thank you.
Thanks, Manoj, for your question. Like last year, we had EBIT margins of 7.4% in our wire and cable business, and at the same time, we had targeted to improve by almost 100 basis points. And we are very happy to share that we have achieved this target in first half also. At the same time, now also we have our plan to improve these margins and maintain the volume growth, and even to do and achieve our target of 18% volume growth, what we have defined in our Project Rise. So With that, we are quite confident that our H2 will be better than H1, what we have achieved.
Right. Glad to hear that. So lastly, if you look at probably the inventories that you just highlighted, so is it just a near-term thing, or probably should we expect the working capital going back to normal, cash flows turning positive by at the end of the year?
Yeah. So if we see only from cash flow point of view, of course, it is like a little bit on negative side, but at the same time, it will get normalized by this year end. And if we see like inventory or our debtors level, it is in line with our expected levels, what we have planned. And whatever levels we have, like net working capital of 57 days, will maintain those levels.
Right, sir. So lastly, if you can throw some light on progress on cables, how things are panning out there, probably how the expansion plans are on track. So probably any progress over there, that would be helpful.
So our long-term expansion plan of investing rupees 1,200 crores, particularly in wire and cable business, in that also like major focus is, or investment is in my cable segment only. Our overall project is in line what we have planned, and expansion is going in line with our master plan only.
Sure, sir. Thank you and wish you all the best.
Thank you. The next question is from the line of Praveen Sahai from PL Capital. Please go ahead.
Yeah, thank you for the opportunity, and congratulations to Rajesh ji and Jigar ji for elevation. My first question, sir, is related to the margin only, because this quarter on overall basis gross margin improved to 300 basis points. So is there any inventory gain also accounted in this quarter because of LME prices?
Thanks, Praveen. When you see this margin improvement, we are comparing with last year Q2 FY25, which, as I already told, that was not very normal. But when you compare with my yearly gross margins of last year also, we have seen a good improvement, and this is sustainable. And this we have achieved through my better product mix and like whatever efficiency control we are bringing in our operations. So these are maintainable and sustainable margins, and we'll keep achieving and improving in this front. There is no impact or larger impact on the copper prices.
Okay, good to hear, sir. Second question, sir, as you had, the earlier also, and even in the media also, you had said 18% of a volume growth for a year. That tells that the second half required 23-24% of a volume growth. So from where and how confident you are to achieving such kind of a good volume growth?
So in our project rise, we have targeted 18% volume growth on CAGR basis. So, and as per our plan, we are on track only. On quarterly or half-yearly basis, there may be like 1-2% here and there, but we need to see in this growth in larger business plan and prospectus.
Yeah, okay. And any color on the export, because export grew very faster this quarter. So any geographical specific locations you are getting a more of attraction from where you are getting such kind of a 35-36% of a growth there?
So export, of course, we got some new customers and new geography also. Our still Europe and Middle East, our biggest market, and we are getting very good growth from there. And overall, if you see, like there may be like 1 or 2% here and there, but our focus is on domestic as well as export market. It is equal focus, but the result or figures may vary by 1 or 2% here and there.
Okay, last question, sir, on the FMEG. When you are expecting a break even?
By Q4 of FY26.
Okay, so earlier guidance is maintaining that. Okay.
Yes.
Thank you, sir, and all the best.
Thanks.
Thank you. The next question is from the line of Achal Lohade from Nuvama Wealth Management Limited. Please go ahead.
Yeah, good afternoon, sir. Thank you for the opportunity. Congratulations for strong results. Sir, the first question I have, you've said that the exports have grown 20% YY. And particularly you've made a comment that Europe and Middle East continue to do well. So if you could give us some sense in terms of what is the mix in terms of region, B, where the customer additions, and C, if any further certifications or additions on approvals we have seen. And how do you see this exports growth? Will that be absolutely in sync with the overall growth, or do you think there could be a opportunity to have a much larger growth?
So in export, if you remember, earlier we were having some exports of around 8% to US also, and there were some talk and some disturbance due to tariff challenges also. But still, since we have very diversified export market, and so we were able to get or compensated through our existing market and new customers also. Still, most of our sales in export is coming from Europe and Middle East, which is almost 75% to 80% of revenue coming. At the same time, we are making very good efforts for new approvals and new market, and we hope that again US market very soon it will be on normalized basis, and we'll have a higher growth from those markets also.
So are we seeing was there any disproportionate growth for US exports in this quarter gone by?
No, not disproportionate, but US, if it was 8% contributing 8%, so contribution might have reduced by another 2%. But at the same time, whatever growth we achieved, it was from new markets and new customers which are in Europe and Middle East only.
Okay. The second question I have is, given the significant increase in the aluminum and copper price, particularly copper price, if you could give us some sense, how does it impact us, particularly on the export front? Do you see, margin pressure on a on a optics percentage perspective?
So if copper prices keep increasing, then there may be some impact. But what happens, since we are focusing on our change in product mix also in exports now, we are having more focus where products like cable or special wires where we have higher margins. So it will be covered or rather improved from export market also. And this copper prices are always a part, volatility is always part of our business. But at the same time, we are on right track to improve our margins by changing product mix in favorable situation.
Got it. Any guidance for FY27, sir, in terms of the margins?
No, it will be in line with our project. So actually, it will be in line with our project rise only, where we have given guidance about our growth, expansion plan, and product mix, everything.
That remains as is. Okay. Got it. And just for clarification, the volume growth, if you could call out for first half?
It is around 12%.
12%. Got it. All right, sir. I'll fall back in the queue for follow-ups. Thank you so much.
Thank you. The next question is from the line of Dhruv Jain from Ambit Capital. Please go ahead.
Thank you for the opportunity, sir. So my first question is on the utilization level. So if you could just spell out what is the utilization level of cables and wires, and incrementally the capacity addition that you are doing in cables, how much of it would be, in terms of quantum or volume, whatever you want to share, higher than the 66 kV piece in the higher voltage segment?
So, Dhruv, if you see, we are already almost 70% utilization in my wire business, while 90% in cable business. And in line with our growth plan, we have planned our capex in such a way that we keep meeting our projections of getting higher growth in cables and wire as well. So our expansion will keep coming in execution in line with our increasing demand and increasing business plan also. If I talk about 66 kV and above, the measure this capex plan, what is we have a plan for 1,200 crores. In this, like almost 80% is for cable, which includes LV cable also, HV cables also, and we plan to achieve production capabilities up to 220 kV.
Sure, sir. So in that, what would be the share of the HV cables in terms of overall capacity?
See, in power cables, majority of the operations like wire drawing or extrusion or armoring process remains the same. So there are many things common. So to some extent, our our product mix is fungible within cable segment. So it depends during that time what kind of demand we get. But at the same time, we have flexibility to have some product mix change and keep my product utilization to optimum levels.
Sure, sir. So my second question is on your market share in certain specific states. So at the time of the IPO, you had highlighted certain key states in the south and the eastern markets where your market share was less than 5%. Just want to get a sense of how's the progress in terms of market share gain, and incrementally, is there enough opportunity in those states for you to continue gaining market share, or are you at a reasonable level in that sense, and incrementally growth will be closer to the market growth in those states?
So still our major growth is coming from our strong market, which is west and north only. But at the same time, since we have a very good establishment or setup of distributor dealer in south and other east geography also in some states, so there we are looking, or we have seen a good growth, but still it is overall having a very less contribution in my overall market share. So you cannot see a very significant growth, but we are in line with our master plan, and we will keep focusing on new states or states where my market share is less than 5%.
Sure, sir. And so on the cable side, as the new capacity comes through, which is also catering to the higher, voltages, is it safe to say that your institutional share of the volume will go up materially, which could have some bearing on your margins, or that's not the case?
So when we talk about cable business, it is mainly to institutional or B2B side only. So since we are very small player there, and we need to be a sizable player, and our majority of the investment is also coming in that segment only. So we will see a good increase of shares from that segment. At the same time, that will improve our margins also. It is not that that will reduce my margins.
Okay, sir. Thank you so much, and all the best.
Okay, thank you.
Thank you. The next question is from the line of Vidit Trivedi from Asian Market Securities. Please go ahead.
Yeah, hi sir. Thank you for the opportunity and congratulations on a great set of numbers. Sir, could you please give the breakup on the volume growth in wires and cable segment separately?
So in this quarter, we had a similar growth of 16% in both wire as well as cable. Almost similar.
Got it, sir. Sir, I remember in your last call you've mentioned that there is some spillover of major cable contracts to this quarter. Have we completed that, and the overall volume growth of 16%, is it because of this?
No, it's that was very little impact in that quarter also, and it is continuous process. See, since contracts are always continuous, and we'll keep supplying to long-term projects also. So it is like a regular process, and it is not a very big contribution of spillover of contracts.
Got it, sir. So, and one last question. Could you please comment on the margin sustainability in the wires and cable segment for the coming quarters and let's say FY27 and 28?
In our long-term planning, we have targeted of having EBIT margins in wire and cable in the range of 10.5 to 11% kind of margins. by FY28. At the same time, if you see, we have targeted an improvement of 100 basis points in this year, and we are in line with our project. And since normally second half of this industry remains always better looking to the demand and industry behavior, so we are quite hopeful to sustain or rather improve these margins in H2.
Thanks a lot, sir. All the best.
Thank you. The next question is from the line of Sandesh Shetty from HSBC. Please go ahead.
Hello, sir. Am I audible?
Yes, please.
Good afternoon. Good afternoon to the management team, and congratulations for a great set of results. And also, Jain sir, congratulations on your elevation, and Mr. Jigar for your elevation. So, my question to you is on the demand side. We are seeing a lot of inflation in copper. Do you foresee any impact on demand due to it?
No, I
near-term challenge or?
No. So this price fluctuation, as I already told, this is part of our business. Demand is like has to be there. The way we see Indian economy is growing, the investment in infrastructure is coming, or our real estate, or maybe data centers. So everywhere, based on the micro level of Indian economy, we are quite hopeful that this demand will remain stable, or rather, it will be very good in coming years.
And second question, sir, on exports. So for this quarter, the exports growth has been in line with domestic. So the growth was driven by cables, or it is similar in for export growth also?
In export also we have seen a similar growth in wire and cable division. So see, we have a very and equal focus, be it wire business or cable business or domestic or export. So we are getting results from all the segments and areas.
Okay. And sir, in FMEG, you mentioned that you expect to break even by last quarter. So for on a full year basis, is it possible that we break even, or it will be spilled over to next year?
So on quarterly basis, we'll achieve our break even. And of course, since this year already you have seen, we have done a very good improvement, or our losses has been reduced when I compared H1 versus H1 of this year in FMEG. So overall, there will be very negligible impact in negative side.
Okay. And sir, lastly, on you mentioned certain special category of cables that you are planning to introduce or already launched. Sir, can you elaborate on which are the end markets that these special category cables go in, which are high margin?
See, as of now, we are very big player in B2C category, which is like building wire or projects and everything. But as our capacity is coming and our focus is increasing on cable business and special business, so we hope that we will get more presence in utility business or B2B infrastructure business, data center, and OEM business where we have larger demand for special cable.
Okay, that's all from my side. Thank you, sir, and all the best. Thank you.
Thank you. The next question is from the line of Pankaj Tibrewal from Ikigai Asset Manager. Please go ahead.
Yeah, good afternoon and congratulations on good set of results. My question is to Mahendra ji. So when I look at RRKABEL into two parts, one is pre-IPO and one is post-IPO. Pre-IPO normally we used to compound at a very high rate, and after IPO, because of various external or internal challenges, there was a period where things didn't go our way. Now for the last 2-3 quarters, we are seeing that renewed growth and aggression coming back.
Pankaj ji, your voice is very less. Can you repeat this?
Can you hear me?
Yeah, it's better but yeah, it's better. Please continue.
Better. No, what I was saying was that when I look at RRKABEL into two parts, pre-IPO and post-IPO, pre-IPO we used to compound at a very strong rate. Every 2-3 years, 4 years we used to double. And then there was a phase post-IPO where we had a struggle for growth. And last 2-3 quarters we are seeing the same growth path coming back again, which RRKABEL was used to. What has happened in the last 2-3-4 quarters, and how sustainable we are looking at it? If you can just help us understand, it will really help us understand that RRKABEL is back on the growth path.
The overall the economy
last 2-3 quarters has been really good that we are seeing that aggression again coming back on the growth side.
Thanks for this question. See, overall, if you see the industrial scenario and economic survey, total country is growing in a certainly good percentage. And we also, RRKABEL, we are following the same thing. We are focusing more on the institutional sales, project sales, or retail sales. And this is definitely going to help us to grow further.
Yeah. But from a business side, Mahendraji, what has been the focus? How we have seen management changes? If you can just elaborate a bit that.
It's not any management changes. From family, my Rajesh Kabra, who's will be taking care for the wire and cable. Mahesh Kabra, my elder brother's son, he will be taking care of the FMG business. So this is you can say the small succession plan. Otherwise, there is no management changes as you can see.
From a focus perspective, what has gone right in the last 2-3 quarters, which has given us that growth?
So, see, young team is there. They are more focused now. They work further more ahead.
Okay.
And I'm more confident with this team.
Okay. And anything on the product side, on the wires or the cables, which is
product side, there is
any geography or any geography. If you can just give some granular details, it will help us get that confidence that the growth is now sustainable over the remaining 2 quarters this year and maybe going forward in the medium term. So any granular detail will help.
I'm confident of growth in all the regions. Overall, even in the export market, you can see we have grown very well. Similarly, in the local market also. So I am very hopeful we will follow the last 2 quarters trends.
That's encouraging. And on the margin side, if I hear you right in the previous questions, Rajesh is very confident about margin trajectory improving.
Actually, if revenue grows in this way,
yes,
your margins are going to be better.
Better. Okay.
Thank you.
Wish you all the best and wish you all
Thank
continue
you.
the same. Thank you.
Thank you. Ladies and gentlemen, in order to ensure that management will be able to address questions from all participants in the conference, kindly limit the questions to 1 per participant. Should you have a follow-up question, please rejoin the queue. The next question is from the line of Bala Subramaniam from Arihant Capital. Please go ahead.
Good afternoon, sir. Thank you so much for the opportunities. So my first question, whether we have taken any price hike in Q2 or any price hike anticipation over the next 1 or 2 quarters, because due to commodity price rises, one of our competitor have like mentioned 3% price hike in this quarter, especially in Q3. And secondly, in that within domestic business, which end markets are driving growth, especially residential, real estate, industrial, and infrastructure, are renewable, and how we are positioned to capitalize on the government infrastructure push, especially PLI schemes, smart cities, and power distribution reforms.
Yeah. So thanks for your question. See, price hike is a regular process of our business, and it is not about hike or rejection. It is related with our raw material prices, which is copper and aluminum. And in practice, what happens if there is any major hike, say more than 3%, either positive or negative, then we have to change the prices. So in last quarter, we have seen almost 3 to 4 new price lists at the same time. So it is like continuous process, and it had to be connected with raw material price movement rather than a price hike in separate. Secondly, since we have like our major growth plan and focusing in new product categories where right now our major contribution is coming from building wire, but at the same time we have very good capex plan for cables, and the growth will come from like infrastructure development, data center, or export geography where we have seen a very good demand for cables, Indian cable products. So our overall growth will come from in India also and in export also, the growth what we can foresee in infrastructure investment or specialized cable utilization.
Okay, sir. Thank you.
Thank you. The next question is from the line of Rehan Syed from Trinetra Asset Managers. Please go ahead.
Yeah, good afternoon, and thank you for giving me the opportunity. Like, my majority of questions have been answered. So, like, just wanted an update and overview of the market regarding Tier 2 and Tier 3 cities. So, sir, how is the retail demand environment trending across Tier 2 and Tier 3 post festive season? Are you seeing early signs of restocking in the wires and cable segment in this side? And okay, can I complete my question?
Yeah, please go ahead.
And continuing with this thing, like, can you please understand the increasing intensity in the organized cable market, especially from peers expanding capacities? How are you ensuring pricing discipline while maintaining growth momentum? Yeah, this is my question.
Yeah, thanks for your detailed question. And there are two parts. One is regarding the demand in retail market. Of course, we have seen a good momentum in Indian economy, and after GST 2.0 also, it is expected that people will have more savings and the customer spending will increase, and of course this will increase our overall product demand also, especially wire and cable or be it FMEG also. So with the whenever economy do better, we'll have better chances to get more demand in retail market. At the same time, investment in our B2B category also, and a very good growth is coming in infrastructure investment or export market. So this is like seems a sustainable growth over next 3-4 years.
Okay. Thank you for the answer. And yeah, this is all. Okay, I'll jump back in the queue.
Thank you. The next question is from the line of Naman Parmar from Nivesha Investments. Please go ahead.
Hello. Yeah. Good afternoon, sir. Thank you so much for the opportunity. So, can you please give what is the order book for the cable division as of now?
So see, since we are more in distribution business, so we are not having very long term like 1 year, 2 year kind of orders. So this is continuous process where keep getting orders and executing them.
Okay, understood. So in current quarter, what was the contribution of cable and wire?
It's almost in line with our original of 70-30 kind of contribution, where wires contribute 70% and cable is 30%. So it is in line of those ratio only.
Okay, understood. Yeah, thank you so much.
Thank you. The next question is from the line of Sukrit D. Patil from Eyesight Fintrade Private Limited. Please go ahead.
Good afternoon, the team. My question to Mr. Kabra is, as competition in the electrical and wiring space keeps rising, what is RRKABEL doing to build a strong edge, not just through distribution or pricing, but through something deeper that makes the brand hard to replace? Yes, sir. Thank you.
Hello. See, as a company, we always try to create a USP in our products. And this is in the process of the research and development team. And naturally, we'll follow whatever the international trends are there, and accordingly, we are going to act.
Okay. I have another question for Mr. Jain. Can I ask my question, please?
Yeah, please go ahead.
Yes, thank you. As input cost and channel dynamics keeps on shifting, how are you planning to protect the margins, and what cost levers do you think will remain strong over the next few quarters? I'm just trying to understand, how are you going to balance short-term volatility with long-term margin stability? Yes, sir. Thank you.
So, since we have a very big plan for our cable expansion, where we are very small player in B2B segment, and once we keep enhancing our capacity, leveraging our cost structure, as you know, right now we are very small player in cable business, and once I expand my capacity, then my overall efficiency will improve, my price levels will increase, and will keep improving margins. So in longer term, like right now our margins are on lower side, but at the same time we will be in at par with industry level, and they keep improving these margins through operating leverage as well as higher profit giving products and everything.
Okay, sir. Thank you very much, and I wish the entire team best of luck for Q3.
Thank you.
Thank you. The next question is from the line of Abhishek Gulati from Gulati LLP. Please go ahead.
Hi, good evening. Good morning, everyone. So my first question is that in case of wires and cables, like we saw that the 1 lakh crore market cap company, they are growing either at par with us or sometimes better than us. Now we are able to catch up with them. So why is that case? Even a smaller base than them, we are not able to capture the market share.
Yeah, our overall strategy is that how we keep ahead of the industry average, and we are on line of that growth only. Yeah, when you see in short term or quarter-on-quarter basis, there may be some deviation, but still when you see our master plan or our capex plan, then of course we will achieve the better growth than industry average.
Okay. And in almost all the players in the industry guide that they will be growing at 1.5x of the industry. So what is our market share currently, and what we are targeting in terms of future in 2-3 years down the line?
So I hope this industry is expected to grow at 13-14%, because by thumb rule, double of your GDP, this industry grows. And we are also, since we are expecting a volume growth of 18%, so it will be better than industry average. And this we are trying to get through better product mix or new capex plan by investing in our cable business, and at the same time wire will remain in focus, which is our core contributor to our wire and cable business.
Okay. And last question is, what is our ROE target 2 years, 3 years down the line at the company level that we're targeting?
It will be about more than 20%.
Okay, that's good. Wishing you all the best. Thank you.
Thank you. The next question is from the line of Karan Kamdar from Choice Institutional Equities. Please go ahead.
Hello, sir. Congratulations on a good set of numbers. Sir, I just wanted to understand how are we separating ourselves from the competition in the FMEG segment especially, so that we can get a good growth in this segment. It's a very competitive segment as far as I understand. So are our products different or is our pricing different? What is our edge in the FMEG segment specifically? Thank you.
Yeah, so there are 2-3 points. If you see, even in last 2 years, we have grown much ahead of the industry average, and that was due to a separate focus on our FMEG business, where we have a separate CEO and we have a separate distribution line. What we understand that FMEG business is quite different from wire and cable business, where you need to have a different kind of product, and at the same time we are making a big investment in our R&D team, keep introducing new products. And in last 2 years, apart from economy category also, we have introduced a good number of products in premium and mid-premium category. So in that way we are ahead of the industry and getting this good growth and improvement in our margins as well.
Okay. Thank you. So just a follow-up on this. Since we've already had some good growth, as you say, are you confident that competition will not be intensifying over the next medium term, because consumption is increasing and there's capacity additions in all major players, especially in FMEG. So any further color on how do we sort of separate ourselves in the mind of the consumer? Like, why would I go for an RRKABEL fan or some other fan?
That we will achieve through better products in terms of quality, having good prices, so that consumer can get attracted to RRKABEL FMEG products. And still, if you see, by having right product mix, investing in R&D, we'll keep growing better than industry, and our products will be different from market and get good improvement in sales.
One last question, if I can squeeze in. What are the primary geographies for FMEG segment?
FMEG, we are very good in North and west part and a few states of even east also. So it's still a very big market in south and other states.
Okay. Thank you so much, sir. Thank you for the opportunity.
Thank you. The next question is from the line of Rahul Agarwal from Ikigai Asset. Please go ahead.
Hi, sir. Good afternoon. Thank you for the opportunity. So just two questions. One is referring to the cable and wire segment. Fiscal 26 looks like, coming back to normalcy on growth and margins on both sides. From top line, as you have explained, I think it's pretty clear that the growth is sustainable both on cable and wire going forward. But just on margins on a control basis for cable and wire, what could be the levers for further expansion from a fiscal 26 base? That's the first question.
So Rahul, if you see like what we have planned in our Project Rise, that we want to achieve double-digit 10.5% kind of a bit margins in wire and cable by FY28, and towards that only that we expect to achieve through better utilization of capacity or increasing product expansion. So we are quite confident, and already in first half we have seen that whatever we have targeted, we are there in our line with our master plan. So we are hopeful that even in this S2 or in coming years, we'll keep improving as per our guidelines, projections we have given.
I understand, sir. Just a clarification. I believe the EBIT report on segment results includes the treasury income, right? So this 10.5%, I should include the treasury income margin as well. Is that correct?
Yeah, but first of all, this treasury income is not pure treasury. It is part of, since we are the biggest exporter, so when we follow this accounting terms, then the exchange rate goes into treasury income. But this is my real operational income only.
Yeah, absolutely. I appreciate that. I understand that. I was just saying that the guidance of 10.5 is inclusive of that, right?
Yeah, that is inclusive. Yes.
Got it. Just last question on export margins. How are the trends on a YY basis for first half? I believe the cable mix is expected to improve. If you would just comment on that, please. Thank you.
Yeah, so already cable is having more contribution in my overall export market also, and that's why margins are also improving, and it will keep improving in coming time also.
Could you give some more details on what is the export margin right now and how have they improved first half, just historically?
No, not separately. We do not give this type of breakup. So it's like in line with our overall master plan of business plan and overall business performance also.
All right, sir. No problem. Thank you so much and wish you all the luck.
Thank you. In the interest of time, that was the last question. I would now like to hand the conference over to the management for closing comments. Thank you, and over to you, sir.
Okay, thank you everyone for taking some time out to participate in this call. In case of any queries, reach out to us or our investor relationship agency, MUFG Investor Relations. We wish you all the best and hope to interact with you soon. Thank you so much.
On behalf of RRKABEL Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.